and I focused with him obviously on the silver market. And his projection for the next decade, which 10 years at my age goes pretty quick, is that by 2030, the amount of industrial demand for silver will be somewhere around 80, maybe even 85% of the market.
Now, one of the things that I've heard you say regularly is that silver is the most undervalued metal on the planet. Why do you believe that is?
Well, the facts. I mean, the only metal, counting the base metals, that isn't somewhere close or over their 1980 high is silver. So, and this are nominal terms. I mean, we're looking at 1980 prices and saying a dollar equals a dollar. And of course, that's not true at all. In the last few decades, the dollar has devalued substantially. And yet we can't get back to that nominal price of 50. If you look at the average price in 1980, the average price was about $20 an ounce for the whole year on average. And we're above that, but that's not what we're looking at, or the comparison I'm making. The comparison is what all the other base metals and precious metals did, and where silver lies is at the bottom of the pile.
And if we were to look at the fundamentals, one of the statistics there that I read recently is that the demand for silver for 2021 went over 1 billion ounces, which is, I think, the first time since about 2015. Now, when we spoke before, it was just in and around the weekend of the silver squeeze, and we saw a good spike in silver up over $30 an ounce. We've obviously come back from those levels, but there was very strong investment demand in silver in 2021. Is that something that you think that we can expect to carry forward into 2022?
I do. I think with what's coming with the energy situation we'll talk about in a minute, and what's going on in the other financial arenas, the stock market, the bond market, the real estate market, the currency market, of course, with the potential war, there's so many things that portend for the metals to do better. I do believe we'll have a strong 2022.
And if we were to strip out the investment demand out of that, and we look at the industrial demand, is that something that we can expect, particularly with the electrification movement and the green movement away from fossil fuels? Is that something that you think that we can expect also to grow in there? So we'll see an increase of the supply side, or an increase of the demand side in both the investment and the industrial?
Yes.
Right.
A little bit's been overblown on the EV, the electric vehicles, although it does use more silver than a conventional ICE engine. But the demand for silver in industry is a trend that continues to go up. And I did a study with Matt Watson, who's an independent analyst who studies all the metals. And I focused with him, obviously, on the silver market. And his projection for the next decade, which, 10 years at my age goes pretty quick, is that by 2030, the amount of industrial demand for silver will be somewhere around 80, maybe even 85% of the market. So there's a lot of demand for silver in the electrification, alternative energy, of course, EVs, as I mentioned, catalysts. So once you have that kind of demand, any additional marginal demand, which is basically your investment demand, assuming that silver jewelry and silverware stays about the same and usually do, you've got a lot of potential for silver over the next decade. Now, to go a step further, I think that we're probably getting closer than that before we have a pretty big price explosion based on, as I said before, all the other markets. But nonetheless, if you were just patient and you wanted a legacy investment and something that's undervalued, where you can really get your quote unquote money's worth, or your fiat worth, or your currency worth, it would be silver.
And we're seeing it. We've seen a small deficit in the last couple of years on the silver market in terms of the supply demand and deficit. On the supply side of things, are there any particular issues which you have identified or which are important to you in terms of saying that we may be able to keep up with the increase in demand, or will not be able to do so?
That's a tough one. I'll say could, not would. We could, if you could put a mine in production quickly, but that's almost impossible these days. But I am aware of a few deposits that have substantial silver in them and a pretty high grade. Navidad, for an example, with Pan American, once that comes on board, that will be, and I don't know what rate they're going to produce at. I'd be surprised if it was anything less than 20 million ounces a year. And that is a substantive, not only flow, but the amount of silver in that deposit is rather noteworthy. However, there isn't a lot of those type of deposits left. There are a couple more, but again, in those instances, you're probably looking at close to 10 years to get them into full production. So yeah, I think with the energy costs increasing over the next few years, it will be a rocky road, but generally up. We're going to see more and more pressure on silver miners to make a profit. The way that the markets work now for quite some time is that silver's been treated as an industrial metal by the bankers, and in only the most positive silver mines or lead zinc mines that produce silver as a byproduct are you able to make a profit, because the amount of cost, all in sustaining cost in the silver market, is basically the cost of what your total energy costs, labor costs, insurance costs, land leases, transportation infrastructure come to. In other words, you're mining it basically at cost with very little margin. And gold, that's not as true. In gold, there's usually a better margin. And that's why you're able to mine stuff that's like 1 gram a ton, which is a ridiculously small amount. But with modern mining techniques, you can do it. With the gold silver ratio at like 80-1 currently, or in the high 70s, you have to think about equating silver to gold kind of thing, and realize how undervalued silver is even relative to gold. So silver mining is something that's absolutely required. You can't run the modern technological society without it. It's the most important element on the planet besides oil. And yet it's treated as the old proverb, I would say proverb, as the old adage is, like a stepchild. It's really not well received by the investment community. And you at Goldcore probably know that as well as anyone, because it's not like you're getting so much demand from the investment community that you've got to hire a phone room of 25 people to answer the phone all day. You can handle your flow, and there's very smart people in invested in metals. In fact, of course, I'm biased, but probably the smartest people on the planet are people that have gravitated to the precious metals. But that's a very, very small percentage of the investment community.
I can't disagree with that. Now, if we're mining silver at very close to, if the cost level of mining silver is close to the spot level, it makes it obviously hypersensitive to any sort of inflationary pressures on the energy side of things then, naturally, correct?
Well, it does. In most mines, I'm using rule of thumb here so people can go in the chat box and say I'm wrong, but I'm looking at the big picture. You're looking at about 25% of most mines, the cost is energy. Yes. So if you've got energy doubling, for an example, you've really, moved your costs up. And I'm not saying that oil is going to double, although in the next 3-4 years, I wouldn't be surprised if it did.
And then, therefore, I interviewed recently on this channel Steve St. Angelo. I'm not too sure if you're familiar with his work. We talked.
Steve and I are friends, and I adhere to most of his work. I don't agree on absolutely everything, and neither does he agree with me on everything. But one sharp guy, and he's probably one of the most undervalued thinkers out there in the precious metals, because he puts the big picture together. Whereas most of your people like me, I'm not one, but what I'm referring to is people have a finance degree, have worked in the mining industry, and they just make this assumption that there's plenty of oil, there's plenty of energy to do whatever we want, and if there's a shortage of energy, all I have to do is throw more currency at it, and the problem is solved. And that's not true.
One of the points that Steve St. Angelo made on that interview was the concept that gold and silver, and obviously in this instance we're focusing on silver, is a store of energy. because it's a commodity that will be used in industry, and particularly in the electrification and in solar panels, and the move away from fossil fuel. And it's a store of energy because it takes a certain degree of energy. And as you're saying, it's 25% of the cost. The mine cost is actually energy. And that's mined at current prices. So it represents a store of energy as well, because if we see a doubling of energy prices, silver will have to be mined at that much higher rate. Do you buy into that concept that silver can be seen or viewed as a store of energy?
Yeah, I get his idea, and I could go a step further. I mean, if you take a field of wheat, and take winter wheat and you store it, I mean, that's energy that produced it. You had to put oil on the ground as fertilizer. You had to plant it, which is a machine that takes diesel. You have to harvest it with a machine that uses diesel, and transport it somewhere and then put it in a container. So I can make the argument that there's energy stored in a pile of lumber or wheat or what have you. But I think, to go back to what Steve is saying, which is correct, is what else can you have that has that much value and that short of a volume that lasts forever? I
Mm-hmm.
mean, you can't have a pile of wood or wheat or any food stuff. You might say oil, but who could put oil in their backyard? So really, it's the most, and that's why it's money. I mean, it's money because of all the properties that Aristotle said money should have, and silver being at about an 8-to-1 or 7-to-1 ratio right now in the ground, and then about a 10 times that amount as far as how it's demanded in the investment realm, shows you that's probably undervalued relative to all the metals and all the commodities.